Welcome to another edition of the ShadowTrader Video Weekly. My name is Peter Resnicek from ShadowTrader.net. In last week's video, we analyzed a number of factors that pointed to the decline being more of a flesh wound than the start of something bigger. That turned out to be correct, but where do we go from here? There's a very large inverted head and shoulders forming on the longer-term charts of the SPX. Could that take us back to all-time highs? I'm not sure, but the potential is there. In past videos, I've discussed falling volatility. Well, it continues to fall, and just this past week, we broke through a very, very key level. I'm going to show you what that is and what that means for the market going forward, and also leave you with a few trade ideas. All right, let's get to it. All right, so kicking it off with the S&P, as we always do. If you recall, last week's video dealt with specifically the factors that may have contributed to this move here being what I call just a flesh wound or start of something bigger. And we were looking at all those different factors, and if you recall from last week's video, we laid them all out, and I was leaning towards the fact that the data seemed to support that it was quote-unquote just a flesh wound. And this week's price action proved that by retracing no less than 100% of that move, actually more than 100% of that move. You can see this is the move here, came up to the high, and now we took it back, and we actually made a very bullish close, I believe, on Friday, where we were able to close above that that line, which I think is very, very important, right? We were literally here to here, and we were able to close above it. So I think that's very, very important. So in the bigger picture, things do seem bullish. All right, what has this left us with on the weekly chart? This has left us with what I call candles lining up same-size bodies. That's simply a phenomenon. It's just a term that I came up with a while ago when the candles are the same size, meaning that the body of the candle is equal to the prior candle, and they are lined up, just means that they're consecutive bars. And the way this works basically is that the market should go in the direction of the second bar. The second bar tends to, the newer bar here tends to trump sort of the prior bar. So that's what I'm thinking there. So to keep that in mind as well, we do have candles lining up same size bodies. Now, all of this put together, if I stay on this weekly and bring it out like this, is, to me, possibly forming an inverted head and shoulders. So this area here, certainly, if we look at just these levels here, and this shoulder is higher, this is what's called inverted head and shoulders. And this is a relatively powerful pattern, and it usually will play out over a longer time period, meaning that we have this set up on the weekly, and if you notice that this took a couple of weeks, at least 4, 5, 6 weeks to resolve, and this has already been here in this right shoulder, 1, 2, 3, 4, 5, 6. This has also been about 7 weeks so far. So this pattern, to me, if you look at the fact that these prices were here in a cluster, then you had a big break, then you came back, now you're in that cluster again, but within this choppy range, notice that prices have really done nothing but rise through that area. I thought that there would be a lot more resistance actually in this area. Whenever there's a large area where there was indecision, generally there will be indecision again once prices return to that area. That area, of course, has a lot of value, and prices are pulled to areas of high volume as if a magnet, and they are often held there. What's interesting about this advance, as I was just saying, is prices moved into that range, but they weren't really held in one spot. They just kept slowly traversing on up to the upside. So that is very, very important. Okay, other averages. NDX, right? Look at the disparity here between the chart that we just looked at and the NDX in terms of the candles lining up same size bodies. This is clearly leading, which is very, very bullish. Notice that the second weekly bar is completely outside of the prior weekly bar, and we're basically on our way to all-time highs here. It's a possibility. Now, the one negative here in terms of the averages is the rut, is that the Russell, which should be a leader, is actually showing some relative weakness. Notice you have this topping tail on Friday, a couple of topping tails just kind of sideways, and it's kind of stuck in a 50% area of the prior week's down move, whereas the other indices that we just looked at, as we know, they went through that area by 100% and even more, right? So notice that this is only half the area. So that is important to note. You need to watch the Russell closely next week. If the Russell can move up above Friday's high, that's a very strong buy signal, I would say, that's going to take the rut up to this prior high around the 1600 level. So watch that 1563.59 next week, because it is going to be very, very important. All right, now back to the SPX before we get into other stuff. will this pattern possibly lead us to all-time highs? I think that it could, right? Remember that if you just look at the simple distance of the shoulders here, which is just above 2,800, right? Any way you want to slice it, you're looking at a couple hundred points here, which basically takes you all the way to 3,000. And this distance here where we are in the SPX, where we closed at 28.22 on Friday, note that this high here is only 29.40-ish. So this is not perfect here. This fib is not perfect. And obviously we have already blown through the 61.8 a while ago. And I'm a big believer that whenever candles close on whatever time frame you're looking at, obviously if you're day trading, you might be looking at an intraday 5 or 15-minute chart and seeing if a 5 or 15-minute candle will close above the 61.8, which then increases the odds that you go 100%. In this case, we closed above the 61.8 4 or 5 weeks ago, and we continue to close bars above the 61.8. So that tells you that, you know, just that sort of normal retracement that's expected didn't happen. And we know that especially on this particular bar here on the weekly, where, look, there was just the slightest reaction as we went up and over that 61.8, came back into range, and then the next weeks after that just kept on rallying. Okay. Volatility, VIX. This is very, very important. I've alluded to this in prior videos talking about how there was a floor here, and that floor was at around 1350, and it was the gatekeeper, if you will, to whether or not the VIX would come into the 12 to 11 handle, and down here possibly even lower. Look at this down here. This is really even closer to a 10 handle. This to me is very, very bullish. Just the fact that volatility continues to deflate, get lower and lower. We're seeing large percentage moves down in volatility. Whenever the market has an update or even just a sideways update, we see this VIX coming down. More importantly, notice that in last week's move, right, you had this rally in volatility because last week was the down week, which we call the flesh wound, quote unquote. Notice that where volatility collapsed on the rally, deeper, much, much deeper than last week's low. We actually took it out. So, you know, you had that mirror image action. S&P, of course, went a little bit higher. That's probably why the VIX is a bit lower. But I find it interesting that we actually broke this 13.5 area. VIX closing at 1288 on Friday. I think it's pushing a little bit lower. All right. Let's take a quick look at market profile, if we could. One of my favorite things to talk about. Weak high versus poor highs. Everybody know what that means. Those of you that follow the pre-market perspective, you know that you can just mouse over all of these terms, and they're all little tooltips will pop up in the blog, which is kind of cool. I've put all the market profile terms in there. But weak high versus poor high. Basically, weak high is always a high that is at a prior visual and mechanical reference. What does that mean? Think about it. Think about it if you were a day trader and you see that something has resistance at 50 and it's going up to 50 because the prior day's high was 50. Some visual reference that traders will sell mechanically against that everybody can see. That's a weak high. When you move up to that kind of area, usually you sell off right to the penny. That's also a sign that you have a weak high. Weak highs are often very, very exact, very, very perfect. So look at how perfectly exacting this was. Here's your high from 313. Correct? And it actually matches very closely to the 3-4 high. These are just a couple ticks apart. Notice that the overnight trade on Thursday, between Thursday night and Friday session, where did it go? Right to it, dead on it. And then Friday session took it out because, of course, it was a weak high, so it was able to be taken out in Friday session. So weak highs generally get taken, and they should be marked off as such and carried forward in your narrative. So that's actually a bullish sign. We were able to take out the weak high. Beyond that, what I'm seeing in the profile here that I find interesting is that we kicked off this rally all week on very, very poor structure. This is really lots of single prints here. Then you have a balancing day here. But while this is happening, notice where the value is. Value clearly higher, cleanly to the upside. That oftentimes is a sign of a longer term rally kicking off, because this is a sign that there's a lot of emotion, a lot of positive emotion. People are getting excited here. They're not waiting for any sort of a pullback. In not waiting for any sort of a pullback, notice that this has left 3 gaps on the chart. The little arrows here are gaps. I'll make this a little bit bigger so you can see that. Right? These arrows here are gaps. Left 3 gaps on the chart, none of which had filled. Interestingly enough, this one filled overnight, but that doesn't count. It has to fill on an intraday basis in an RTH session. So the gaps remain. Remember, this is somewhat poor structure, the fact that we have the 3 gaps below us and the fact that the move started on those single prints, but that's generally how moves start. The longer term money will not get involved right at the beginning. They are not the innovators. The innovators are the smaller traders, and those are the ones that are frantically covering their shorts as the market jumped up here on 311, broke out after the down move, right? Opened sort of in the middle of the prior day's range, which was the culmination of the down day. And look what happened here on the single prints. Everybody just hitting the button and covering all at once. It is very common for rallies to begin on this sort of poor structure, so do not discount it. All right. Hold up. Wait a minute. Time out. I just had a great idea. Let's make a ShadowTrader commercial. This will be fun. If you really enjoy the pre-market perspective, you get up in the morning, you're anticipating that email at 9 a.m., you really feel that it's helping you understand the market better, tell me about it in video form. Literally, just grab your phone, make sure it's landscape mode like this, not portrait like this, and shoot a quick selfie video. Could be 15 seconds, 30 seconds, whatever. Just talking about everything that you like about the pre-market perspective and market profile, all right? It'd be great if you could say your name and your city of where you're from when you start. But you know what? If you're not comfortable with that, don't bother. It doesn't matter. I'll use it anyway. I'll take all those videos, I'll put them together in a montage, and we'll make a really great ShadowTrader commercial. Good idea? Let's do it. All right, one last thing on the profile before I get back over to the regular charts. I just wanted to point out that the point of control volume-wise here and even time-wise was able to close above the 2-day balance and above the key resistance, which were those multiple highs there. I think that's somewhat important. Also, I did like the structure. I liked the structure on Friday, given that it was a breakout day, even though it's only a 2-day balance. It is a breakout, and I did like the structure. I would be less bullish if this was some sort of a different type of structure. For instance, if I saw that traders were long in the hole at the top, where there was a very, very skinny excess up on the top and prices closed up here and value was down here, but that's not the case. You notice that we have this pretty nice build out of value all over the place, and like I said, point of control closed well above that week high and decent close in the market as well. Okay, if you recall from last week, the play that I gave you was Zscaler. I said to pay attention to the fact that that Zscaler was moving up. Right, these are the last 5 days here of the market, and as the market was moving down last week, I was pointing out to you that Zscaler was moving up. Well, Zscaler turned out to be phenomenal this week. I was long this myself, made about 5 points, and one of the things I want to leave you with is the simple fact of doubling a range for targets, and in Zscaler it worked perfectly. I felt the target would be around 67. Notice that this is 55 to 61. So thus 61, right, to about, this is 55 to 61, 6 points. 61 plus another 6 points is what? 67. And you notice that it had trouble it moved up above 67 and closed just below it. So just something to think about. Whenever you have, don't consider the distance of the gap. Don't count that. Just count from the low of where the stock is up to the high. So then you have a range, and then you just double that range. And notice that Zscaler made it right up there pretty easily. So that was my trade idea from last week. A lot of people emailed in and said that they profited from that, which makes me very, very happy. Going forward, Zscaler is definitely on my radar for a pullback. We don't have one yet. Let's just see how the trend line goes when we put something there. Pullback all the way to here would be phenomenal. I don't know if we get it, but long story short, I am looking for a pullback in the name. Okay, COST. Big jump here on earnings out of a very tight pattern. Love it. Big increase in volume, which is always bullish, and now pulling back. And basically pullback is viable here in cost. And if we flip to the weekly, what I find interesting in it is that you have a prior high here and another prior high up here. Both of these are going to be pulling prices to them as magnets if the market stays bullish. And also, as I talked about the inverted head and shoulders before, forming in the market, well, look what you have here. Same exact thing. This is also inverted head and shoulders, and it's pushing prices here. So I like cost on the pullback. Probably needs another couple of days to balance out here, and then I'll be looking at that. All right, next item up for bids, as they say on the Price is Right, GS. I've seen this movie before. If the market is to stay bullish, I think this is finally going to actually break out of this horrible range that's been very, very tight, where is the buy point. It should be obvious. It's right at the round number 200. It's been resistant for so long, right around that 200. There's 200, up in here, and now you have this nice shelf of this price action of the entire week. So that's also going to form an entry point for next week. I will start to build a position if we can clear these highs. That one here is 198.97. Notice that this one is 198.93, and Friday's high was 198.85. So the fact that they're all so close to each other, just under 199, tells you something. When you see that 199 print next week, it's probably on and popping, and you would be looking at a move at the very least up here into the 210 area. All right, last but not least, my favorite play, my favorite stock actually, is Amazon. This is a longer term play on the weeklies. I wanted to point out to everybody that there's an amazing shelf going on here, kind of a shelf resistance up at the top here, but really more of a box play. And when it's a box on the weeklies, you have to play on the weekly charts for the target. So this is a long, at the very least, all the way to the mid 1800s to get up to here. Double the box is actually more than that. You notice that if we put the range of the box right up here, we're closer to about 1900. Obviously the all-time high is here. I don't know if that will be in play, but this is also ahead of earnings. They are going to report around third week of April, I believe. So we don't have that many weeks between now and then. And like I said, if we can break out of this box, at the very least, I would think we go to that downtrend line around 1800, and then we'll see how traders are treating the stock coming into that earnings report. All right. So brief recap, going back, SPX, inverted head and shoulders on the weekly. That's bullish. Candles lining up same size bodies. That is bullish. The fact that we just basically took back a liquidation break, that is bullish. Remember, liquidation breaks strengthen a market. And Russell lagging, that's not so bullish. That's the only thing really that I think is the possible Achilles heel here is the Russell. So watch that Russell very, very closely next week. We want to see that strengthen up and get on up there with the rest of the indices. All right, that's all for this week. As always, thank you so much for watching. Announcement, Monday and Tuesday. Brad's taking a little bit of time off. I'm going to be helming the Squawk Box, so come by if you can. It's going to be the Monday morning session from 9:15 a.m. to 11:30 a.m. And then on Tuesday, I'll be on all day, all right? Beyond that, remember to get in those videos for the ShadowTrader Commercial. I think it's going to be a lot of fun. Remember, nothing fancy. You can literally just do it like a selfie. Remember, it's got to be landscape mode, so it's like this, not like this. Just hold it out like this, record 15, 30 seconds. Tell us everything that you love about the pre-market perspective or any other ShadowTrader product, or even just these videos, whatever it is. If ShadowTrader's been helping you and you enjoy it, tell us. And like I said, we're going to make a great commercial from it. It's going to be a lot of fun. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.